Hello and welcome to Rookie Ninjas, where we explore day trading futures on the NinjaTrader platform, identifying supply and demand and reading price action because your 401k could use a little competition. Alright, for today's video we're going to be working with Bollinger Bands, chalk and volatility, and range. What can we put together with these indicators to make a viable strategy and help us really in our pursuit of reading price action? Using indicators that spike is really useful when it comes to identifying opportunities in the market. It shows that the market is moving sharply in a certain direction. So with that in mind, let's see if we can maybe find an opportunity where price rebounds off of a certain point and we can find an entry with a higher probability. So with that in mind, we'd be looking not so much at the peak of either chalk and volatility or our range, but rather the moment that it takes a drop. So how could we put this together? So to start, maybe we want to identify that either one of these is going to be at a low point before exploding up past whatever marker we want to place for it. Maybe you want over 100 for your chalk and volatility, maybe you want over 5 for your range, maybe you have a completely different indicator in mind that you would like to use. But regardless, we want in this situation for either one of these indicators to be showing low before breaking up past a certain point. So what we could do is we could have our strategy look for this opportunity. Once it presents itself, then upon either one of these indicators dropping from that high, that'll be our entry. Alright, so let's get started. To start with, we'll need a true or false statement. We'll add a variable, call it opening, and that will be our starting pool. Alright, to review, we're going to go back, pull up our first indicator, chalk and volatility, and what we'd like to see is that chalk and volatility will be at a low point a certain amount of bars back before then exploding to a higher point afterwards. Because we're using two indicators that might be operating at different levels, we're going to group up our conditions just so that we can spread out the opportunity for us to find an opening and we don't shoot ourselves in the foot because the two indicators didn't line up perfectly. So by doing this, I'm saying that between 1 and 4 bars ago, chalk and volatility was less or equal to 0. If that's the case, and we run the same setup for our range, so essentially all we're saying is that at some point in the last 4 bars, both range and chalk and volatility were both fairly stagnant and at a low point. As we build these strategies and you guys follow these videos, there really is no rhyme or reason here. We might as well be pulling indicators out of a hat. So that being said, if there's any indicators that you enjoy using and you'd like to see it featured in one of these videos, feel free to leave a comment below and we'll see what we can do. Alright, with that part done, so long as range was equal to or below 2, at least 4 bars before we're looking for a signal, we are good to go. Now for our third group, we will need to have, let's do range. At the very least, 1 bar ago, we're going to add a few of these as well. We'll have range crosses above 6. There's not enough because we did 1 bar ago, just because we're also going to be having chalk and volatility thrown in there as well. We're going to add a few of these. So either the current bar or the previous bar or even up to 2 bars ago. Perfect. Alright, that works. Well, because we're going to give ourselves a 3-bar spread for these indicators, especially jumping in value, let's go ahead and eliminate bar 1 and bar 2 for our initial stagnant signal. And of course, we'll have to add a 4th group, which will follow our chalk and volatility. Let's say 50. And of course, let's look back at least 3 bars. Perfect. Our 4th condition looks good. We're going to do the same thing to our original one and go ahead and eliminate a 2-bar look back and as well as that 1 bar. And this will tell us that there is now an opportunity to possibly take a trade. Alright, on to our next set. Our opening bull is true, and we're going to want to see, it looks like we're looking for a long setup, so we're going to want to see our chalk and volatility at least 1 bar ago drop in value. We just want it to be less than the next bar. So we'll set up a few scenarios here so as to not be too picky. All we want to see is that with this indicator in particular, we popped up, our bull became true, and now that indicator is beginning to drop in value. And go ahead and do the same for our range indicator. So 1 bar ago can be greater than the current, but let's leave ourselves open. Let's say 2 bars ago being greater than 1 bar ago. Perfect. The thing about building any type of strategy is that it really is trial and error a lot of times. But start with some sort of vision, indicators that maybe you like, and maybe a strategy that you're already trading. This is just going to help you get more insight into what's working and what's not. So at this point in the game, both chalk and volatility and range have dropped. The line indicates where we should see, in this case, our buy signal. Now, because set 1 is not biased on whether we're going long or we're going short, we're going to actually use these Bollinger Bands that we have and see if we can finagle something to identify whether we should go long or we should go short. So for instance, we're going to match up with the indicators that we have on our chart, and we're specifically looking at the lowest band, let's say 1 bar ago, and we want that band to be greater than, let's use a 1 period EMA. So it's essentially going to sit on top of the bars. It's going to follow price extremely close. So long as a bar ago our lowest Bollinger Band was greater than our lowest, then we are looking for a long entry. But of course, we can go ahead and add a few scenarios here. We don't want to box ourselves into a corner. So at some point, price, because of the strong push, would have dipped down below our lowest Bollinger Band. All right. Perfect. this will allow us to enter a long limit order. Go ahead and set up our parameters, make it nice and simple. For our short setup, essentially it's going to be virtually the same thing. The only difference being, let's see here. Alright, so starting with our Bollinger Bands, if we're going to set it up for a short trade, we're just going to essentially mix these up. So instead of the lowest band, we're looking at the highest band, which needs to be less than our current price. So as you can imagine, if we're setting up a short trade, then what we're going to want to see is price explode up, and what we're trying to catch is the rebound as price tries to consolidate and test back down before maybe ultimately moving up or continuing down. Take a look at something, because yes, you know, we could always take the route of having a profit target or a stop loss, but how about instead we have a target that allows, at least for the potential, for more profit. So in this case, we can maybe target a second moving average. Alright, so how might that look on our strategy builder? Let's see. So first off, this set should reference Alright, let's say that we're at the very least profitable. Alright. Hopefully you can't tell too much that I'm trying to make this up on the spot. Alright, let's take our EMA valued at 1. Actually, we're going to have to group this instead. Perfect. Alright, our EMA valued at 1 will be greater than our generic EMA, which we'll go ahead and leave valued at 12. Okay. See how that looks different. Alright. Let's keep adding to this. Just like we did before, essentially we want to give this, well, room to breathe, so we're going to allow maybe a 2 to 3 bar distance of when our price EMA is greater than our generic one. So bear with me. Actually, what if we were to take this and complicate it even more? And instead of just saying that our EMA is above, our price EMA is above a certain generic one, but let's throw a third moving average in there. So instead, what we're really looking to see is that our price EMA set to a 1 period is going to be greater than a certain generic EMA, let's call it EMA 1, but less than a second generic EMA, which we'll call EMA 2, which would have to be set to a higher amount than the first one. It was around this point, around 2 in the morning, 2:30, that started to realize that this strategy was getting just a lot more complicated than I wanted it to be. But on the other hand, when you have a strategy that you can just load up with inputs and variables, then ultimately you've given yourself something that you can really backtest and backtest it in an extremely intricate way. That being said, I started running into issues with compiling and with everything. I took a break, I added all my inputs, and as you can see, it's just getting later and later, and I'm slowly losing my mind. But what's trading if you can't lose your mind at least once in a while? Now, here's the next day. I decided to take a little break and get some rest. But here are all the inputs. And just for the sake of showing you a finished product, here is how these last two sets turned out. So essentially for our first condition, we want to see if price breaks above our profit target. And for our second condition, we want to actually reduce our risk, and essentially if price decides to go ahead and break below that lower Bollinger Band and we're in a long trade, we'll cut our losses and we'll go ahead and exit our trade early. Hopefully this will help give us smaller losses and larger wins. Alright, so with this strategy now in a compilable state, stop loss profit target set up as well, the fun part of setting up our analyzer comes into play, and this strategy is actually hitting at a 70% success rate. And what I actually personally love is that it only presented itself 10 times in a 30-day period, meaning at the very least that we are, with that in mind, we have a strategy that is hitting at a very high profitability rate when it does present itself, and it's rarely presenting itself. So the conditions for something like this has to be extremely unique, and really this really reflects reading price action in general. We want to be patient. We want to wait for those setups that are known likelihood of being profitable. Alright, now for the fun part of backtesting, let's just see if one of these 10 actually operate the way this analyzer is saying. As I've said before, the analyzer is fantastic. It's a great tool. It's going to help you not only see how your strategies are performing, but it's also going to help you to optimize them depending on what kind of inputs or variables you're using. That being said, I have absolutely had strategies where the analyzer does not match up with a live setting or even a playback as well. So somewhere along the lines, the data is being convoluted. Maybe it's the system that is not powerful enough to keep up to actually follow such a strategy. Whatever the case might be, backtesting is crucial with anything you end up putting together with the strategy builder, or if you end up coding the strategy yourself. You're going to want to take your time and make sure that it's doing what the results say that it's doing. Alright, let's update these parameters, which I don't think I showed before, but these were actually optimized through the analyzer. And let's see if our strategy actually decides to perform. Now it occurred to me now, unfortunately, that I'm editing this video, that I didn't actually have my indicators showing on this chart in particular. But as you can see, we do have one hit from our analyzer results, and here is our rebound setup. Take a look, 350 positive. All right, beautiful. 425 on a one contract. All right, and let's go ahead and at least do one more. Just a moment. Try to back this up and see if we can catch when the trade's entered. Make sure our strategy is enabled. Good to go. All right, let's take a look. That was pretty fast, but it is lining up once again with the results that we're getting from our analyzer. This is great, fantastic. You're gonna want to take your time, go back to maybe each one in the last month, maybe even download, depending on what sort of data you have saved on your computer, other months to backtest as well, and then most importantly, set up a sim account to see how this strategy is operating in a real setting. But with this being said, just the idea that we have something that's low recurring with a high profitability rate and has been backtested and shown to work is a great sign to move forward from. Alright, let's go ahead and wait and see this trade all the way through. There's a lot of intuition and a gut sense that comes with trading. Having specific strategies will help you not exit trades too early. For instance, this one here was active for nearly 10-15 minutes. And there it is, a beautiful win. Let me just go ahead and pull up the results one more time from our analyzer. I was real worried about this strategy in the beginning, but overall I'm very pleased with how it turned out. 10 trades taken in the last month, sitting at a 70% profitability rate with larger wins than losses. Well guys, until next time, and if you have any ideas, feel free to reach out. Wish you all the best and happy trading.